We've got a bumper Thursday, but is that bumper Thursday behind us? Kunj Bansal, everyone in a sense breathed a sigh of relief looking at the way how some of the beaten down, chopped out of fashion stocks made a comeback. Would you take heart from yesterday's price action or would you ignore it completely?
Frankly, I would ignore it completely, but that is not where the story ends. We have to look at a few other factors. So obviously to arrive at a market view in the shorter term is always difficult, but still if one has to take that call, one has to look at the scenario all around. And if we look at the scenario certainly doesn't look good. So earnings support is not there and has not been there for last 3-4 quarters. The macroeconomic numbers like inflation etc. are under control. Global oil price although has come up in last 1 or 2 days, but is still in a broadly reasonable control. But now with budget coming up, what will happen to the fiscal deficit is a big question. Tax collections haven't been growing. So to that extent there are probably more negative factors and less positive factors. Still the market is close to life high, at least in terms of large cap indices. Broadly the liquidity inflow continues, certainly from the domestic institutions, from global institutions, on and off. So to that extent we are in quite a dichotomic situation in a market which is looking difficult, that the supporting factors are not there but market is at a life high. Now again within that also market has largely remained range bound in last 1 month, even for that matter even more than that. And that's why I said that yesterday's comeback is probably ignorable. We might continue to remain in the range that we are in. What one will have to look forward is now with budget coming up, look forward to that. Of course the factors are something which is an ongoing thing. So along with budget we will also have to keep a watch on the monsoon, which will continue to play an impact. And then very shortly we will be back into the June quarter numbers, which also in my view are not likely to be great. At the same time liquidity inflow is something that will continue. So taking a balance of all these factors, again I come back to your question. 1, I'll ignore yesterday's rise. 2, I still feel that market will continue to remain range bound at least till the budget trigger.
Kunj, for a time that the sector has really been under pain, you don't really see any revival come by. What is it that you're making of some of these moves on select stocks from within real estate, like Godrej Properties, the most favored one right now, which is DLF? We know how consistently they try and deleverage their balance sheet as well. What is it that you're making of whether or not these are good investment propositions even now after the run up in the stock? Kunj?
Yeah, so as we all know, after the implementation of RERA roughly about 3 years ago, the expectation was, and which has happened, is that the bigger players will benefit, and that is what has happened. The weaker players are going out of the market, are selling out to am I audible?
Yes, Kunj. Go ahead.
Yeah. So the weaker players have gone out of the market and they have been selling out to the larger players. A consolidation is definitely has been in the offing and will continue to remain, and that is what has benefited the larger players. Now within those larger players, the quality management in terms of reputation, corporate governance, credibility, ethical practices, etc. And 2, financially in terms of lower leverage are the ones which are the clear beneficiaries. And I think that is where the stocks like Godrej Properties fit in. Their ethical practices across the businesses, and especially in the real estate business, which has been known to be kind of not favoring the buyers and the people who want to own the homes. It is largely considered has been till recently sellers market, wherein the builders, the agreements were always drafted in a way that they were in favor of the builders and not in the favor of buyers. So that is where the stocks like Godrej Properties come in. As I said, quality management, controlled financials, low leverage. More importantly, what is happening in the market is that whatever money is coming in is wanting to go in only into the 2 kinds of stock. One, either where there is clearly a growth continuation. So as we all know that on a very broad basis growth has fallen to mid-single to high single digit across almost all the sectors. So that is where the money which is coming in is finding that challenge, that should it continue to go into those sectors. Probably that is not happening, and it is going into only the companies, not even sectors, which are still showing 15-20% kind of growth rate. One. Or two, the money is, if not finding those kind of growth, high growth ideas, quality names, it's going into the established, reasonably market cap, reasonably liquid business ownership wise quality managements. And that is what is happening, and that is what is leading to stocks like these continuing to show an upward movement, continuing to show buying interest. Obviously, as a result, prices continuing to move up.
Kunj, leave us with a couple of topics today, as we head into trade, particularly from, the segments of the market where we are seeing some excitement, whether it be select names in infrastructure, engineering, cement, anything there that's looking good to you?
So infrastructure, no, I am still not positive, despite the same government having come back, and we saw a very high amount of focus by this government earlier also, and we will see now also. Of course, budget will make it amply clear, but that somehow doesn't percolate down to improvement in the financials of the infra companies, and that is what we have seen in last 4 or 5 years, that we have not seen any of the bigger, not even bigger, even a larger set of infra names not performing, and so not really positive there. Cement, yes, although the stocks are at their high of the prices and the valuations, but because the demand will continue with the price continuity, we can have a pick. So in mid caps, Aramco Cement is a good buy, and in large cap, Ultratech Cement is a good buy. You haven't asked me to add banking BFSI sector, but let me add there City Union Bank as a good buy within the overall BFSI, mid cap private sector old generation banks. So I think these are the ideas that, if traders are lucky, could perform in the short term also. If not, certainly they are the good quality companies and will perform in the medium terms.
Morning, Kunj, and sharing some of those views with us.